I know I took profit here. It went up there to hit my profit target, and it actually went up a little higher and it broke above the high right there. So that was another supply setup to take. All right, let's jump right into it. Let me show you how you can make $500 a day, easy trading the index futures. Yes, we're talking about the NASDAQ 100, the ES futures, the Russell, the Dow, whatever your poison of choice is. And it could be the micros just as well. But I'm going to say this first and foremost. The micros may be a little bit, I'm not going to say tougher to get to $500, but it's all boils down to the number of contracts. So I trade the E-mini, okay, NASDAQ 100 and the E-mini S&P 500 futures, okay? But I'm just going to show you quickly if you trade either one of those, all right, just trading primarily just one contract or two contracts, you can end up making $500 a day, all right? I'm not going to say it's guaranteed because it all boils down to really you understanding market structure, understanding breaker structure, understanding liquidity, all the things that I've been stressing and talking about here on this channel. Do yourself a favor. If you're someone that's new or a beginner watching this video and you were enticed by the actual title, maybe the thumbnail, whatever the case is, watch the videos on the channel, guys, okay? We have people who are successful. We have traders that are part of our Discord community that are making real money. Trust me when I say that. You can come over to the Discord and ask, hey, how many people here are successful? How many people have past prop firms? How many people are trading with their own funded accounts? How many people are actually making money or profitable, okay? You're going to have individuals that are over on the Discord community, that are part of the community, to say, look, I've been following the way Mike trades, I've been following the strategy. I'm not telling anyone to do so. I'm not telling you to stick to the way I trade, okay, because this is how I trade. But I'm just simply here to tell you that if you follow the step-by-step procedure or break down the strategy, you will find some level of success. It won't happen overnight, I can assure you, unless you're some mathematical genius or you're really understanding this stuff and you trading like a robot, okay? Because you have to be able to, first and foremost, read the markets the correct way, all right? The shifting, the movement, the trend reversals, being able to capture this stuff with your eyes. But the more you do so, hey, the more you're going to be able to find great setups, and you're going to make $500 plus a day pretty easy, okay? So we're talking about each day making $500, okay? So how can you do that, and what time frame, Mike, would you say to trade in? Well, I'm going to tell you this right now. Trade, for me, 7:30 to 9 o'clock, okay? Pretty much pre-session is pre-market are great opportunities in which I find great setups. Now, if we have major economic news at 8:30 in the morning, try to stay out of that time frame between 8:30 and 9, or maybe 8:15 to 9, because anything can possibly happen, especially if we got some major news coming out. So if you want to trade 7 to maybe 8 o'clock or whatever the case is on a news day, but do not trade as we get close to 8:30. Now, if we don't have news in the morning around 8:30, 7:30 to 9 o'clock, great setups. And then once the market opens up, I typically like to wait 15 to 20 minutes, just simply for the volatility kind of get back to normality in a sense. And then I start looking for trades maybe about 9:45. And I like to trade between 9:45 and 11 o'clock, okay? So maybe in total about 2 hours, I may be looking at the charts. And people always ask, what about the afternoon session? It really depends on you. I don't personally trade so much in the afternoons, but 1, 2, 3 o'clock, whatever the case is. After 3 o'clock, I'm really not focusing on the markets, to be honest with you. And even in the afternoon, I'm picking 1 hour if I am going to trade, whether it's between 1 and 2 or 2 and 3, and that's going to be it. But most of my trades happen. I give myself a 2-hour window from 7:30 to really 11 o'clock, somewhere between there. An hour before market, maybe after the hour the market opens up. Okay, we're talking about Eastern time. All right. So, but I want to show you trading supply and demand and how you can do this. All I simply do, I'm going to show you based on today, 2 trades that I took, okay, and I was only trading 2 contracts, but that's with the E-minis. Now, with the micros, yes, you probably will have to bump up your lot size if you want to be able to do this, but it is definitely possible, okay, as long as you are holding your runners. I keep talking about that. One of the biggest goals for me in 2024 was for me to be able to hold my runners, okay? That's the thing that I've been working on, because prior to that, I was scalping, for a few points here and there, getting out the market. But now it's all about limiting the risk and simply being able to get into better trades or better trade setups and holding the trade through. It's better for me to take 1 trade a day possibly maybe 2 if I need to, and be done. Because the more that you are entering into the market, the more risk that you're going to put on, and eventually you are probably going to take a loss unless you're cutting your trades early enough so the trade never hits your stop. Now, let's take a look here. Jumping right over to the chart. This is my 60 range chart. Guys, I trade range charts. Please do not ask me why I simply trade range charts. It's only because I started doing so from the beginning. Why? Because it's cleaner to the eye to me. I just love the way, and I can find multiple setups on my range charts. Time based, I'm not knocking anybody who trades anything else outside of a range chart. Time, tick, volume, whatever you may trade, whatever it is, the charts you love to trade, stick with it. You're consistent, you're profitable, stick with it. Now, jumping over to the charts, I'm giving this a quick rundown right now. What did I see leading up into the market open? All right, so take a look here. Using my 60 range chart, what I did, bring the chart together, it was just look at the last few days, okay? Breaking lows, okay? We're breaking lows, meaning making lower lows and lower highs on the chop to the downside, right? Maybe this low right here, in which the market has not taken out quite yet. And I'm talking into the today's session, but it did break through it today. But what I'm trying to say is that early into the session, it had not. So we've been moving kind of sideways, if you want to say, the last few days, in a sense, even though we've been kind of making higher highs and higher lows to the upside, okay? So we did start breaking structure higher. As you can see here, swing up, pull back, swing up. Nice pullback, retracement, and then it pushed higher. Now, then we started flushing to the, or I should say start breaking structure to the downside. BOS, breaking structure to the downside. Okay, now what I like to do is I like to see when I'm marking supply and demand zones, I question myself, hey, did we break any means of an area of a structure to the downside where there was a supply or demand zone that was created, okay? If we're breaking structure to the downside, looking for a supply entry, okay? Aggressive selling, all right? Breaking structure to the upside, I'm looking for demand setups. Now, we started breaking structure here to the downside, all right? You see that there? Now, if you take a look, we didn't break below right here at 18,052 or 18,050. That's a half number. Always keep the half round. Hidden pivot numbers in your mind, in the back of your mind, whatever the case is. 40 and 70 is a pivot number, hidden pivot that people don't tell you about as well. But anyways, moving on, we're breaking structure to the downside, as you can see right here. Now, what I saw into the overnight session, yes, we started breaking back to the upside right here, okay? The market pushed up, breaking above this area right here, or these, let's blow this up a little bit, bring it out. Above this area here at say 18,194. So we started pushing higher, as you can see here. But then what did the market start doing? If you can see here, when we started making coming back to the downside, we started breaking structure right here. So this was like if you really pay close attention, even though the market was pulling back and this was a bullish movement to the upside right here, it was breaking structure higher. Okay, we're going to ask ourselves this question. Is the market going to break this low right here? We don't know. I mean, it could continue pushing higher and broke above here at 18,000. What is that? 18,200. Let's just say that. Okay. No, I'm sorry. 18,520. Let's say that. But if you pay close attention, this was a bullish pullback right here to the upside. Where the market was pushing higher, but then it started breaking structure back lower, and eventually we did get a break of structure below here at 18,118. But before we did that, we were breaking smaller areas of structure, meaning taking out these what I like to classify internal areas of structure, all right, or minor areas of structure within this range right here where the market pulled back, bullish momentum or bullish uptrend right here, and then the market started pushing lower, breaking through these smaller internal areas of structure right here, okay? Broke below this area here, broke below this area here. So you got to look for things like that as well. And then eventually broke below this area here. Now, what I did was I marked this area of supply, demand, because this is a demand zone. We started breaking structure back to the upside right here. You can see that. But then we started pushing lower here, breaking structure to the downside. Now, we're in a range now. You got to be able to see this, okay? All right. And when the market tapped into this area right here, this demand area, and actually I took this trade a little early. I didn't wait for the full on tap. I should have, but I was into the trade a little early. As you can see, it came down here to 18,164, and then it was like a few ticks away from that area, maybe about 6, 7, maybe about 6 ticks away from tapping into the zone. But eventually it did tap into the zone. I got into the trade a little early, and when I did, I was aiming for it to run back up to this high right here, okay? Because this is a demand zone that's untested, and there's a gap there. If you don't know about gaps at supply or demand zones, they are powerful stuff, and there's a reason and purpose behind it. I talked about it, I believe, in a video yesterday, and then a video a few days ago. We summarized a discussion about what gaps and how they are important to trading supply and demand. Okay, so I'm gonna go ahead and show you this clip here, the video, trade that I took today in this area here and took it back up to here. This was the actual trade that you could have also taken and gave you a second opportunity in a sense once it again tested and actually tapped into this untested, where's the gap at, back area of demand right here, and then it runs back up to the upside. So let's go ahead. I'm gonna show you that video right now. Two trades that I took, both of them were long, and again I'm aiming for the area. Let me minimize this right quick so I can show you this area. When I got the trade right here, right back up here to this little small high, this little swing high right there at pretty much 196.5 or slightly above. But this was an area of demand, so this was a great setup. Let's go ahead and show you the trade now. Blow this up and hit play. All right. So I have my stop resting down here on two contracts. My take profits up here around 2002. I may have took out just a slightly I may have took out just a little bit earlier here. I'm not quite sure. But again, we're marking the higher base chart, marking that demand zone off the higher base chart. I'm moving my stop up right now to kind of lock in profit, as you can see here. And I may have closed slightly earlier because it kind of started pulling back and ticking around here. I'm not 100% quite sure. I mean, I don't remember every single trade I take. Okay, we got stop right there. So like I was saying, I was moving my stop up to lock in profit, and it came back and hit me at 7. That's okay, but it did go up there eventually, but it gave another run right here to the downside and tapped into the zone of what you could have taken the trade from right there. And the next trade that I took, as you can see, the market broke above this area right here at 198. Slight reconstruction right there, leaving behind a demand zone right here. So it pulls back and to this zone right here. We're looking for the rejection and take it back and break above this small, this high right here at 122. So I'm gonna show you that trade right quick right now. All right, let's go ahead and play. So, okay, I'm in the trade here. I'm moving up my stop just a little bit here. I entered at 18,194.5. I'm aiming for 2010 pretty much. And so let's see what happens here. I know I took profit here. It went up there to hit my profit target, and it actually went up a little higher and it broke above the high right there. So that was another supply setup to take with a breaker structure there. So okay, there we go. And here's a little short scalp that I took to the downside here to kind of round out the day shortly after that long position. Here we go. Let's see. I think I picked up, I don't know, about 11 points here on this trade here, I believe it was. So you can see I have my stop position at 181, a few points above my break even, and taking it on down to 165 to run close to the low right here of this swing right here. This is, if you take a look here, this is a swing to the downside right here, and all this in between is internal structure. Okay, these are internal swings to the downside. So this is basically a range within a swing here, as you can see, as the market is breaking. Okay, there we go, 11 points right there. So it was like, what was it, 15 points on one trade, 7 on the other, and 11 on the other, total like 33 points. But anyways, just here to show you that it's very possible to take, a few trades a day to trade the NASDAQ, and you can even do it with one contract to make $500 just trading 2 hours a day. It's really easy if you know what you're doing, looking for the breaker structures, and looking for key areas of supply and demand. Now you have to qualify and be able to understand, to be able to know which zones are better zones to take. And that's why I talk about the gaps, avoids back out of zone. That's one of the criteria that I like to see, or a must see at a zone. Is that zone, is there a gap there, meaning where it hasn't been tested yet? Is it a fresh zone? If so, yes, it raises my interest. But if you want, I go into detail about the breakdowns of what I look for once the market taps into or comes back to a key area, like this area right here, this demand zone right here. I'll go down to my 12 range chart, my lower time frame, or my lower base chart, and I talk about the strategy in detail, the breakdown, step by step. I'll just kind of give you a glimpse into, let's take this supply zone right here, resting at 160 area. Okay, so we'll move over to the 12 range chart. Before we do that, let me do this. Let me go ahead and put it on all the charts so we can find it real easy on the 12 range. Just going to give you a quick, just a synopsis of what I look for and how I break things down. But first and foremost, as we can see, the market was moving lower and taking out these smaller areas of internal structure to the downside right here, leaving, and this was a demand area as the market was making this bullish move here, and then it starts to come back and break through these smaller internal areas of structure to the downside, breaking these lows here. It tapped into this run right here where there was this demand zone. So it left this demand zone and the market gets back there. Then we look for some means of rejection. Let's move to the 12 range right quick. So this is my lower base chart. This is where the magic happens once we marked off our zone, or once I mark off my zones off my higher base chart. All I'm looking for is where the market is basically still wanting to push to the upside, showing momentum, okay, where we're breaking our area of structure to the upside, and then pulling back to a smaller area of demand on the 12 range chart. So as you can see here, the market was running higher to the upside, okay? It breaks through this, above this area here at 179.5 or 180, okay? And when it does that, it left behind this area of, small area of demand right here. You can see, pushed up, pulled back, boom. This was the area of structure that broke above or broke above this breaker structure area right here above 18,180. So this is a small little area of demand. The market comes back to it. You see right here, okay? Comes back to it, and it's untested area. It comes back to it, it rejects it, and boom, takes off to the upside. So all we're doing is marking our higher base zone. This is it right here off of the 60 range. And then I'm looking for, once I move down to my lower base chart, I'm looking for a breaker structure to the upside above this area right here, and then a pullback to a smaller area of demand on the 12 range, which is this zone right here. Okay, it comes back into it. We get the rejection, the break and close of the candle above. That's the important piece, a critical piece, because you may be asking, okay, when it gets back to the zone on the lower base chart, what are you looking for? A break and close of a candle in the opposite direction. This bullish candle here closes to the upside at 18,177. I'm long, okay? And I have tons and tons of videos like this. If trade breakdown videos like this, okay? So that's what the elite members, those that choose to sign up and become an elite channel supporter for $6.99, those are the videos that you receive when I break down the trades and I go into detail so you grasp an understanding of the trades that I do take and why I've taken those trades. Again, you also get the video playlist, so you don't have to sit here and watch 700 videos. They're hand-selected videos that I've pulled out, and ones that are pertinent, cover a lot of good information, valuable information, covering the strategy and just valuable content information as well. So again, $6.99 is all it is a month. If you choose to become an elite member, again, that link to do so is down below the Discord link in the description portion of the video. All right, but that's all I wanted to share with you guys today. And just to tell you that it's definitely possible to make $500+ very easy if you're trading the E-minis, and maybe a little bit more struggle if you trade the micros, but that's all going to depend on how many contracts you're trading in regards to the micros. But making $500 is pretty daggone easy trading the futures, guys, and put it like that, and just doing it by trading 2 hours a day. Okay, but that's all I want to share with you guys. I appreciate each and every one who's been following the channel, those that have subbed to the channel. If you're not a current subscriber, you're a first-time viewer, please take the time to go ahead and sub by clicking the subscribe button. Make sure to turn on all your post notifications, okay, so you never miss one of the uploads. And last but not least, please drop a like on the video. Take care, and I'll see everyone in the next trading video.